Oh, I do like to be beside the seaside. I do like to be beside the sea. Hold on. There's no coffee in this cup. Oi, woman! Why is it?
Make it on!
Would you like a cup of tea, my dear? I'll make the coffee. Apparently I treat her badly, but as you've just seen, I am a very henpecked husband. She is awful to me. Nah, she's not. She's my best friend. For those who haven't been here before, you're probably thinking, what on earth have I stumbled onto here? I thought this was a trading channel. You're right, it is. But it's real life, my life, and I enjoy it every day with my best friend. So let's roll the intro. I'll make the coffee, save me getting a black eye, and I'll tell you a little bit about what I'm doing this week. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and as you can probably see, I am the Scruffy Trader. And what I'm trying to do is put trading in the real world and just give you a little snapshot into the strange life that I have, because trading gives me it and I enjoy it every single day. Oh, talking of enjoying things. Yes?
There you go. I've tidied your mess up.
Well done. You can say hello to everybody. You know, this person here, come here. Alright. Might be the love of my life, but she's also the bane of my life.
How is that?
Because if I make a mess, she hurts me.
I do not.
She does, because it means she doesn't make me the coffee, and that really grieves me. Very sorry, very sorry. I know it's a bit childlike, but we're having a great day today. And I'm, funny enough, having a great week. We were supposed to be on holiday this week, but with various events around the world, that ship has sailed. So I was reading some of the comments and some of the messages that came across the weekend about small position sizes and how sometimes it's a bit unfair what I show because of the size that I trade. So I thought, well, let's see if we can trade small and achieve a holiday from it. So that's what I've been doing. And today I'm back on cable because it's a continuation from the London breakout challenge that I did last week, which is one market, which is cable, which is British pound versus the dollar. One basic premise, a breakout, not necessarily the London breakout that you normally see, but my version of it, which is still box driven and it's still on a breakout, but that breakout is based on either entering boxes or a midpoint and compounding your small gains. And it started with £1, just £1. And I do what I always do, I split it. Now the broker that I use allows you to do 50p per position. So starting with £1, I was allowed to open up 2 positions. When they cashed out, I could use the money earned to open up another 2 positions, so forth and so forth. And see if we can build up a little bit of money. And also within this, as was seen yesterday, markets are dynamic. And this is where mechanical systems kind of fail to a degree. And I'm going to touch on that at the end of the video. Because what you think is going to happen and what the markets do are normally 2 different things. So you have to have a little bit of discretion and be able to read the charts. And yesterday was a classic example. There was a massive move to the upside, came from nowhere. There was no real news to drive it, it just happened. So you have to be prepared for it. And I was. So I watched it go all the way up. Kept on altering fib levels till the steam ran out, which then locks it in stone. And then you trade those fibs. So again, it's a breakout of sorts because you're waiting for levels to be broken because each fib has zones within them. And that's what I did today. And it has paid off, as you're about to see. So what I'm going to do, I'm going to play the trade. I still have today's running. There's a chance to close out in the next hour or so. It seems to be trucking downwards as I suspected it would. And it's already cashed a number out, and I have 2 positions left. Won't be opening any more today. If I can hold the one overnight, which I have been holding, I will, but if it closes out, closes out. And that's that. So let's play the trade, and then let's have a little chat about mechanical. So that was that. Just a quick recap of the scores on the doors, because I've just been doing this for a few days because of no other reason than why not. Thought I started it, I'll finish it. Very small position sizes, as you can see, 50p's. The basic premise is £1, but because I split trades, they become 50 pence. And if you win, you can compound, cash them out, you can use the money again to open up new positions, so forth and so forth. And this is what we get. Now, the idea, if you looked at the first part of this, which was the video called Process on Money, I'll drop a link for that below. It was basically to see how you can use small money sizes, compound them, but have a tangible value to it, so it doesn't seem worthless. And in this case, it's a holiday. I worked out that if I wanted £1,800 across a year, and I only had 50p or a pound to start with, I need roughly around 15 pips a day. So that's what I thought I'd set out and see what you would get at the end of the week. Well, the daily goal, as you can see here, is 15 pips. The week goal is 75. Working on 50p a position, because that will be the smallest position size we start with. And we're looking to achieve £37.50 come the end of the week. Not a lot of money, but all these 30 quids add up. And what we find is this. So on Monday, did a shade over 28 pips. Tuesday, did 16. And today, 110. And the way it's worked out is I opened 4. So there was 4 open positions to start with on a Monday. They are the 4 that closed out. So all 4 closed out. Didn't carry anything overnight, and there was nothing part closed. On Tuesday, I opened 6 positions, but only closed 2 of those positions out, which is these 2. So 2 were closed out, none were part closed, left me 4 running over into today. I've opened up a further 5 positions today because there's been multiple closes throughout the day, and shut off 8, 2 of which were part closes here, and I now have 3 left running over for tomorrow. So all of this process is a little bit of day trading and a little bit of swing trading combined, using the same positions, because if I think it's going to run, you let it run. But I'm going to touch on these losses here before I go on the camera and explain a little bit about mechanical trading. As the price was moving up, it went into an area where I make a choice as to whether I'm going to kill or continue. As I was looking at the chart, I had a feeling this might come back. I could be wrong, and tomorrow we'll find out. But just because you scale out of a trade in profit doesn't mean to say you can't do it the other way as well. You see, if I think I've got half an inkling it might come back, but I'm unsure, rather than take the entire hit, I will take half the position off and let the other run. If it runs and hits the hard stop, I've still reduced my risk because I've closed off early. But if I write and it turns round, I could actually pay off that half close. That's the theory. So that's what these are here. It's just the market shot against me, which it did this afternoon. I decided, because there's strong directional moves, there's a good chance it'll wave back. Thought, well, rather than take a full hit, I'll close half the positions off and just run it and see what happens. So that's what I've done, and what it's left me is 2 half trades and a full trade running overnight, which I'll look at tomorrow. So I'll jump on the camera and then I'll give you kind of my opinion of mechanical trading, following on from what you obviously see for sale and what I've been doing over the last 2 weeks. So give me a minute. So that was that. Just a little snapshot of what I've been doing this week. Instead of sitting in the sun, absolutely battered from the night before, I'm here talking to you guys and doing a holiday challenge. God, my life is amazing. Whoop-de-doo. But I'm still happy. And I'm happy because I'm sticking to a process rather than thinking about the money. And yes, there's £75 and 10p, and most people will just go, it's crap. Where's the green Lamborghini? Well, here's the tit.
You ding-dong!
Oh, make it stop!
Do you really want to be one of them? No, you don't. And that's what I'm going to get on about mechanical systems. I've just pulled in, over the last 3 days, 154.8 pips. So if you think about the pips rather than the money, that is a massive return, because most people would be happy with 50 pips a week. Okay? But I stuck to a process and it's paying off. Now, I've just been making fun of the green Lamborghini guy, and those guys kind of fall into 2 categories. There's a number of systems being sold, and I get ads all the time for them, like this one.
You ding-dong!
And they just grieve me, where they're trying to say that they buy this system, I was a waitress or I was a homeless or whatever, and I'm now on 100,000 a year in less than a month. It really grieves me, because you're not, and that's the hard truth. Trading is a professional job and a professional career. And unless you look at it in that way and think to yourself, this is going to take me a long period of time to learn, even if it's mechanical, you're going to fail. And I know you hear me say things like that all the time and almost negative to the industry. It's not being negative to the industry because I love the industry, and anybody who watches these videos knows I love my job. But it took me a long time to understand it. It took me a long time to make it profitable. But more importantly, it took a long time for me to work myself out. And it's me that's the problem. You know, the systems work. Doesn't matter what system you have, it works. You apply the right win rate to it, control your risk, and you're going to be fine. Okay. So I'll come on to the mechanical systems as to why this is all about. You see, as I was saying, there's a few of them sold, and it's like, I get it all the time. You probably know who they are. Trading without emotion. Simple set of rules. Get in here, get out there. No emotions, nothing. Give me 600 quid. Does it work? No, bloody doesn't. Right? Because it's just the London breakout. And it's a coin toss. That's all it is. And there's a couple of others where they normally pull up a chart from a year or so ago, or even a couple of years ago, and they'll show a couple of moving averages. Now, a moving average cross is the simplest system in the world. Really is. Is it reliable? Sort of. But it's lagging. And because it's lagging so much, you only ever get in very late. And unless there's a massive trend, it's going to cut you to ribbons. All right? So again, that don't work either. You know, because it only works certain times of the year. But it's sold as if it's an easy system and you just go click here, click there. There's the other one. There's this fellow guy. Have you got 15 minutes a day just to look at a chart and you could have an extra £2,000 per month? First of all, he is the most boringest fella on the planet to be selling a course. But secondly, it ain't happening. All right. So let's talk mechanical systems. Do I think they work? Yes and no is the answer. And talking of yes and no, here's the person who always says no. See how she's trying to get in there? Did I say you could be the star of the show today? Please don't hurt me. No, she is. And the reason why it's yes and no is if she asks me something, it has to be yes. If I ask her something, it's no. Shocker there, isn't it? A woman getting her own way. Never mind, it's a modern world. I digress. So, do they work? They get you part the way there. There's a number of systems out there being sold. And I genuinely don't think they work. Not in the way that they're sold, that is. You see, if it has a hit rate of 60% and you apply the correct risk-reward strategy, then yes, they do work. You know, the moving average crossover system that's been sold, it's normally peddled on a 5-minute or a 10-minute chart. It'll never work, not in the month of Sundays, because there's too much noise on the market. All right? But it's an easy sales pitch, because you can scroll the chart back and pick a perfect situation. And it happens maybe once or twice a month, but that isn't enough to make a wage or a genuine profit, because for that once or twice a month, you're just going to get ripped to shreds in the noise. And then if you apply it to an end of day strategy, which it will work, and it is quite good on an end of day, you're waiting months to get your reward. Most people can't sit on that. And that's where they fall down, because it's the human nature. And the human nature is what makes or breaks a trader. if you're disciplined and you can follow A, B, C, D, you'll be fine. But normally what happens is, it's A, B, I'm getting crippled here, this is dangerous, I'm going to tinker with it. And you don't follow your rules. So they fall down. And that's why they're unreliable. I'll take it on like my style of trading. My high time frame trading is pretty much robotic. You know, I have a set of rules that I have in place and I just tick them off. Is this level? Yes. Is this indicator where it should be? Yes. Is the market got high momentum? Yes. Then I will use the last 10% of the checklist to make an informed choice. Okay, so it's still a little bit of discretion, you know. When I am sort of day trading, intraday trading, as you see me, I do have a checklist, but the homework for the trade is done the night before, and I am funneling in to a single position trade. And that's why you'll see me trade multiple pairs. If I trade one pair, it becomes a little bit more difficult and I have to use a lot more intuition than just a set of rules. This week is a good example because it's one market and I haven't got the luxury of doing what I normally do. Whereas I have a criteria that I look for and I look across multiple pairs to see which one is the best candidate. Then I will trade that pair. And that's why my hit rate is so high. It's because I'm scanning for a single setup, but I know exactly what I'm looking for. When I'm trading a single pair as I am today and have been for the last week and a half, while I'm supposed to be on holiday, I have to be a little bit more intuitive with what I'm looking at. So there is a single set of rules based around a breakout of a certain box that I'm looking for. I have a couple of midpoints that I look for. They're derived from various pivots. You know, because I look at 3 pivots. I look at a daily, a weekly and a monthly pivot. And then I'll look at the price to see how it's reacting. I'll see where it is within a range from the opening hour. I'll also see where it's in a range from the first pre-market hour. There's a lot of things I look at. And then I'll derive a range based on the information I have. And then I'll just go from there. But there's still a lot of intuition within that decision as well. It's not just a case of, right, there's me box. When it breaks to the upside, I go long, and when it breaks to the downside, I go short. Because you'll know yourself, how many times have you been in the market, it breaks a level and then shoots off the other direction? Does it all the time. So you have to then look back into your chart. In other words, you start at the hard right, where the price is now, and you scroll back over to see if there's any conditions similar to what you're looking at right now. And if there is, what happened then? Look at the makeup of the candles of that second range that you've just drawn out and see if they marry up. If they do, then it's a fair idea history might repeat itself. And that's discretionary. And it's why a live trader will outperform a robotic trader. Because the robotic trader will only follow the rules. It can't look back to see if it's happened before. It can only deal in the here and now. So that's why mechanical systems that you see for sale look great, because you'll only ever see the good points of them. But in reality, they fail. Because as long as there's a human being pressing the buttons, the markets will be erratic and the robotic system can't keep up. Because if that was the case, there wouldn't be any traders in Goldman Sachs. You would have no trading desks, no brokerages, just be a lot of supercomputers and one man. That would be it. But there isn't. There is thousands upon thousands of traders. God knows how many trading companies and trading desks around the world. We're still here. And that's why humans will always be the best traders. Okay. So a little bit of strange philosophy from the Scruff. Moral of the story: mechanical systems work, but you have to work them. Exactly the same as an indicator. All indicators work, but you have to work the indicator. And remember, the lower time frame you go, the more diluted it becomes. You know, you want something strong, look at your high time frames. You stick an RSI on a daily, it'll hold a lot more weight than what's on a 1 minute chart. And these sort of things we discuss all the time. It's brought up within the Facebook group regular. What about indicators and time frames, etc. And we have a jolly old chat about it. You're very welcome to come along, by the way. It's easy found, Scruffy Trader. There's no signals allowed in there. There's no selling allowed in there. It's just a bunch of guys having a friendly chat and trying to pick each other up when they fall down. Simple as that. Listen to some bad music as well. Because some of the choices in there are, well, mine's pretty rough, but some of them is absolutely shocking. Yes, Martin, I am talking to you because yours is terrible. But my jokes are shocking as well, so I can't really say anything. But that's it, guys. I love my job. And trading, for me, it's a challenge every day. And I don't mind sharing it on the camera because I enjoy this process. I don't so much enjoy the arseholes when they have a go at me. But that's because they probably bought one of these systems and they tar me with the same brush. Don't know, strange world. But there we go, story for another day. So I'm going to enjoy the coffee because Winky said I had to. She's been on a right one today. You know, I mean, I am literally 3 times the size of Winky, but trust me, she's bossing this house. So this modern world has maybe come to Scruffy's house, you know. Woohoo! Can we not go back to sleep again? I'm sick of this woke environment. I like being asleep. So that's where I'm going to go right now. So I'm going to go watch Game of Thrones because I'm enjoying that again from the start. I might even watch a bit of Star Wars later on when she falls asleep and do it all again tomorrow. So remember, guys, do what you love and money will follow. I'll see you all in the next one.